running side by side. You have the pure sharing economy players, like your Ubers, your Airbnbs, and you have the fintech players, people like Stripe. The reality is that the sharing economy people have actually figured out that the intersection point is the future, the point where you intersect between sharing economy and payment. And so people like Uber, people like WeChat have figured out that this is the future. So Uber now, they have financing. I think Grab Taxi also has financing. WeChat, you can take out loans through WeChat. So these guys have already figured out, because they were user-driven and audience-driven, what the audience wants. The fintech payments have traditionally been focused on traditional transactional behavior. And where I think that someone like fastacash, for example, is really going to be able to make waves, is they're one of the first fintech players that's attempting to get to that bridging point where they're not just looking at a transaction, but they're looking at the user experience to enable and help empower that transaction. And that for me is, where someone like fastacash is really going to make inroads. They think about the user experience. So if you look at PingPay is a completely seamless experience. It's actually very, very easy for the user. However, it's essentially there to drive a financial transaction. And that's the beauty of it. Look at traditional online banking, look at the way that banks approach m-commerce, online banking, payments. It's always a 7 or 8 tokenized step process. It takes you 5 minutes even just to set up a banking payment to your friend if you owe them money. This is not the future. The future is financial fintech products, putting the consumer at the heart of the experience. So the other example of a fintech company that's doing it well is Stripe. So Stripe for 5 years has concentrated on being the transactional payment partner for everybody else. So being the driver of the sharing economy. I think Airbnb uses Stripe. They've also realized now, actually, it's a product. So a few days ago they announced Relay, and Relay is going to become that intersection point that connects social and payment in one seamless space. The user experience will be completely seamless, and that's what's going to make it work. You have a buy now button on Twitter, and you can click it and buy the product that you see the photograph of instantly with one click. That's where the future is. That's user experience. Take something complicated and make it simple. And this is exactly where the fintech industry needs to be. So one of the advantages of social payments is actually that you're already leveraging on a trusted partner. So you don't have to build as much trust in order to gain trust from consumers. Basically, someone who's on Facebook trusts Facebook's protocols. Someone who's on WeChat trusts WeChat's protocols inherently. It's not that they are any more trustworthy than any banking or financial institution. It's just that for especially a younger generation, they've been brought up to understand that this is the way you transact, and that there's nothing to be scared of. So basically, when you're talking about social payments, it's actually the value proposition is always going to be risk versus convenience. So if I am giving my bank details to Facebook and it makes my life 3 minutes easier every single time I make a transaction, is that worth the potential risk of something happening that's not so good, hacking or my account details being made public? For most people, it's that kind of value proposition. If my life is that much easier, is it worth the potential risk? So trust is being built around different value propositions than they were in the past. Social payments are really enabling people to make that decision for themselves. And it's also partly based around the fact that you know the people you're transacting with. So it's not like you wouldn't, for example, use social payment for a complete stranger that you met in the street who said, please sign up to my subscription. You would use it for people who you trust. I'm giving money to my friend. I'm giving money for a product that I understand. And because the payments on social payment are tokenized, it's also a very fixed value transaction. So you can decide in your head what your risk appetite is. You can decide, you know what, I don't even know these guys, but it's $40. So what's the difference? Versus, I don't even know these guys and they're selling something for $1,900, in which case you would kind of revert perhaps to a slightly different risk model. Payment platform space is something that's going to consolidate. At the moment, everybody's fighting to own a piece of a silo. Everybody's fighting to kind of keep consumers within their own ecosystem. And I feel like that's going to play out over the next 4 or 5 years. Lots of different players are going to be there grabbing market share, and eventually the industry is going to consolidate and become what I call non-destinational. So it won't be that you transact only through Facebook, through a Facebook-approved payment method, that you would be able to transact across multiple platforms. And I feel like Apple Pay is going to be one of the pioneers of that, but I think there'll be some independent platforms that will also be able to allow you to transact no matter what platform you're on, no matter what website you're on, no matter what mobile phone you have, and no matter what bank you use, you'll still be able to transact using one method.